Adam Crisafulli, I'm going to go there with you right now because we got shares of Workday down about 7% after hours. We know it's been a mixed picture in terms of tech, in terms of enterprise tech. But the fact that we do have an M&A acquisition by Workday that seems to be tied to AI capabilities, how does it speak to what we were just talking about before those earnings crossed?
Yeah, I mean, I think you're seeing companies across the board ramp up their AI capabilities. Either they're doing it organically internally with their own development teams, or they're going out and buying assets. I'm not sure the size of this acquisition that they're making, but this is definitely an area where they have exposure already, and it makes sense for them to move further into the HR aspect of the market. I think for the stock, the key will really be kind of guidance, like you said. We've had mixed signals on enterprise tech. You had Cisco and Palo Alto Networks, both of which were somewhat disappointing. Unclear if that's impacting Workday's outlook. We get Salesforce later in the week as well. So I think commentary around guidance, both quantitative and qualitative guidance, that's really going to be key, I think, for the market. But all tech companies are ramping up their focus on AI. Like I said, whether or not they have to make M&A to do it, or they're able to do it internally with their own development teams.
Meghan, it was an interesting day where even though the major indices were pretty flat, a lot of software and even smaller software names did pretty well. I mean, Coinbase was up almost 17%. HashiCorp, we're going to talk about later, up 14, even further down in some of the larger names. CrowdStrike was up 3. Palo Alto Networks, which had that rough post-earnings trade, was up 7. How much are you thinking about risk differently, if at all, after last week's earnings reports?
Well, I think earnings season has been a positive surprise, and we've been pleasantly surprised by what we've gotten there. As it relates to small cap, I think you're seeing a little bit of stronger performance today. That certainly has not participated to the degree we'd like to see. I think small cap tech is a little bit of a funny place right now, where a lot of the tech story and the secular growth story is around big data, AI, having scale, and so small cap tech is a little bit of maybe a no man's land. But if we get better economic data with that continued disinflation story, we're not going to get that this week. PCE is going to reiterate what we got from CPI. But we do think that the disinflation trend is intact. We think that the Fed will be in a position to start cutting rates in May or June and do that about 4 times this year. That should all help small cap, and we would expect to see maybe some upward revisions to small cap earnings as we go forward.
Adam, it seems like there's a couple different ways looking at post-NVIDIA earnings. One is, hey, the AI trade is still alive, and that helps smaller companies that are trying to innovate in that space. But the other way of looking at it is maybe bigger is still better, right? Because even though they're already big, they're still managing to grow significantly. Which do you think is having the bigger impact on stocks right here?
Yeah, man, I think for the broader market, like your prior guest said, I think disinflation is going to be the key to the extent we see this kind of rotation back into smaller caps, away back into the more equal weight S&P from these dominant companies. The earnings numbers from all of them, pretty much. Meta has spectacular results, NVIDIA was spectacular. They've been really great, but I think if we're going to see a rotation back into small caps, it's really going to come down to more macro factors, specifically disinflation. There was a great article in the New York Times this morning talking about the real estate component of the CPI and the PC, which is probably the single biggest question mark for this market. If we are going to see further disinflation, you have to see those rent, owner-occupied components of it really start to move lower. They haven't yet. They're likely to, given how rents have been progressing over the last several months. But if you do see that happen, you're going to start to see a market composition more similar to what we saw in November or December, where it was the equal weight S&P and the small cap Russell that really led on the upside. But I think dissecting the inflation data is really going to be key over the coming weeks and months.